Just moments ago, BlackRock chairman and CEO Larry Fink gave his views on ESG and sustainability to a conference call of customers and commentators. It was almost perfectly timed as I'm joined by Morningstar's Global Director of Sustainability Research, Hortense Bioya, to take another look at where the topic of ESG might take us in 2022. So, Hortense, thanks for being with us. I gather you're expecting more money to flow into ESG this year. Could you tell me a little bit more about that?
That's right. Last year, we saw record inflows into ESG and sustainable funds, as well as record assets. And I think there's still going to be strong demand for ESG products this year. It will be driven still by continued investor interest in sustainability issues, environmental issues like climate change, of course, but also social issues such as diversity and inclusion, employee treatment, and rising inequalities, especially in the context of the COVID crisis. Strong demand for ESG products will also be helped by more transparency and clarity on the strategies that are available to investors. And finally, it will be also driven by regulation. There's so much happening on the regulatory front, but if I could mention two pieces of regulation, one in Europe and one in the US. In Europe, we have a MiFID II amendment that is going to go live in August, and that will require financial advisors to consider the client's sustainability preferences in addition to the financial objective. And that, I think, has the potential to really accelerate retail money into sustainable products. And also in the US, there is the DOL, the Department of Labor, that will make it easier for retirement plans to consider ESG factors and invest in sustainable funds.
Okay, I'll come on to the topic of shareholder activism in just a second, but I just wanted to drill down into climate change because that was obviously the big story of the back end of last year with COP26. What are you expecting specifically on climate change as an issue in 2022?
You're right. We've just come out of 26, so there's so much going on the climate front, and a lot of commitments were made out of COP26, and we can expect more commitments coming from companies, asset owners, asset managers, more commitments to achieve net zero carbon emissions by 2050. And I think there's going to be more scrutiny of these commitments, and also as a result, there's also going to be more climate-related data and metrics available that will allow investors to better assess climate risks in the investments and also allocate more capital towards the more climate-friendly companies and countries.
Okay. And it feels to me like we're living in a very intense period of shareholder activism, and we saw last year with Third Point and this supposed plan to split a company like Shell into two, into the good bit and the bad bit, so to speak. What are you expecting on shareholder activism in 2022? Is that going to continue, that level of intensity?
So some investors prefer to talk about active ownership rather than shareholder activism, but we're talking about the same thing here. We're talking about investors that are becoming more active owners of the companies that they hold in the portfolios. And what we can expect this year is really asset managers and investors stepping up the engagement efforts to push for change to improve ESG practices. And we are going to see also some escalation strategies intensifying. So, for example, if engagement fail, then investors will more likely vote against company management and ultimately divest if they consider that the ESG risks are too high, and especially when it comes to ESG risks within the most polluting companies, the highest emitters. So we are going to see really more pressure coming from investors onto companies to really push for change and improve ESG practices.
Sure. Okay. Well, Hortense, thanks so much for your time on that. For more on ESG and sustainability, check out morningstar.co.uk. But until next time, I've been Ollie Smith for Morningstar.